Hi, everybody. Welcome to this Devex Future of Development Finance panel on climate finance. My name is Worley. I'm the UK correspondent at Devex. I also contribute to the Newswire, Devex's daily newsletter for global development news, and to Invested, Devex's newsletter for development finance. Now, there should be some links appearing on your screens around now, where there'll be a bit more information on how to subscribe to those. So over the course of my reporting for those newsletters, particularly around COP26, a topic which keeps coming up is climate finance for adaptation, often about how there's not enough of it. Now, this is a complex area, but it's one that's not going to go away for the development community, so we do need to understand it. I'm hoping this discussion will help unpack it for everyone watching and make it a bit less daunting. So to do that, we've got some really distinguished panelists with us. Dr. Amal-Lee Amin, Climate Change Director at the CDC Group, the UK's Development Finance Institution, and she's also a Senior Advisor to the UK's COP26 presidency. Saliem Fakir, Executive Director of the African Climate Foundation, a think tank and re-granter, and Clare Shakya, Director of Climate Change Research at the International Institute for Environment and Development. So thank you all very much for joining us. Now, it's been said that the issues around climate finance for adaptation are a key problem that COP26 needs to address. So I want to start by asking the panel what adaptation funding, as opposed to mitigation funding, is, and why is it such an important issue? Claire, if I could go to you with this first point, please.
So adaptation is the response to climate impacts. You're adapting to the changing climate. And mitigation is reducing the number of emissions, so reducing future climate impacts. And to date, we've seen much more finance coming in for the mitigation side. It's been around 20%, and last year, 25% of the total finance. But for those that have done least to cause climate change, they really need support to adapt to those impacts. And of course, it's the very poorest that are most vulnerable and emitting least. So it's a solidarity issue. It's there to help the very poorest begin to adapt to the impacts that have been created by others.
So, I think, as Claire said, we know that all countries and most sectors and most communities are now vulnerable to climate change. But of course, it's the poorest people in the poorest countries that are the most vulnerable and need the most assistance to become resilient or to enable adaptation actions. And so adaptation finance is clearly an essential part of that. It's, unfortunately much further behind where we are on the mitigation agenda. And that's partly because we'd hoped that we would have tackled climate change earlier and wouldn't have got to the stage where adaptation was going to be such an urgent issue. But we also know that even if we manage to stay within 1.5 degrees, as we all hope is the case, even so, already many climate impacts are locked in. And so it's essential that resources are provided to those who are in most need. And that's resources at a government level, but also very importantly, resources at a community level, particularly as adaptation actions are so really need to be very local because the context of climate impacts are very specific to the particular location, the particular type of activity or asset. So really important that adaptation finance is not just flowing from government to government or, the multilateral level, but actually getting down to where it's really needed.
Saliem, a specialist on the African context. I
Sure.
wonder if you could talk a little bit more about what that means in terms of sub-Saharan Africa.
I just want to pick up one or 2 points. I think that largely adaptation is seen as sort of a Cinderella issue. It's largely seen as a poor people's problem. Actually, it's becoming a universal problem. It's no longer a rich and poor thing. And in fact, it's a bit artificial to talk about mitigation, adaptation, and in fact also loss and damage. We should have a more integrated approach to this, and it's not reflected in the prioritization of funding, particularly the 100 billion that has been sort of promised since Copenhagen, and it's the responsibility of actually the advanced economies to be able to mobilize these resources. We're short of that. In fact, the OECD report now recently pointed out that we have probably only looked at about $80 billion of contribution. And if we wanted to look at the picture in more granular terms, 70% is going for mitigation, very small portion for adaptation. And in fact, in that geographical distribution, Asia is the largest recipient of those funds, Africa much smaller. And so the challenge for Africa is really that it's actually far more in need of these resources. And I would say a second point is that there is a need for paradigm shift. The 100 billion is going to be insufficient. And this, in fact, comes out of the Standing Committee for Finance, which is under the UNFCCC. They just produced a report which show that if we were to meet the NDC targets that are currently being submitted by countries for both mitigation and adaptation, we need far more resources, running into the trillions, 5 to 6 trillion. But rich countries are able to mobilize that. In fact, if you look at the infrastructure bill that Biden wants to pass, or what the Europeans have done in terms of the European Green Deal, they are literally able to print this money and actually mobilize it far more than poorer countries, because they own sovereign currencies. They can do it with the power of the sovereign currency. So I would say that for Africa, we have to draw on those resources, but we have to think of a much more mobilization of these resources internally within Africa. And we have to take a whole economy approach, because I don't think it's feasible to talk about relying on the climate funds that are being negotiated or being mobilized under the Paris process is going to be sufficient to deal with the challenges. You just have to look at the cost of extreme weather impacts. It's running into 300, 400 billion per annum. So we're nowhere near there. We have lots of other dimensions of adaptation and resilience that we need to solve. Thanks.
You mentioned extreme weather there, Saliem. Can you give me an example? It doesn't need to be around extreme weather, but a practical example of where adaptation finance is either needed or planned or has been done well, just to give an illustration of what this money is used for.
Some of the areas that I think that is being done by actually commercial farmers at the moment, particularly in South Africa, which is really advanced, is weatherproofing agriculture. But these are commercial farmers that have high levels of profitability and ways of financing that are not available to poorer, smaller farmers. So that's one area where you have what is called cover farming to protect agricultural crops against drought and changes in temperature and variability in temperature. The second level is the city of Cape Town, for example, has done a lot of work on adaptation vulnerability along the coastal parts, and is looking to bolster sea level rise by expanding the ability for the city to ensure that sea level rise doesn't cause flooding or damage to coastal areas and property, because they would in the long run lose significant land that would be underwater, and that would be also a major shock to the city's revenue in the future. And the third area, the city of Cape Town had an almost dramatic situation a couple of years ago with ground zero water shortages. And so they've had to figure out 3 levels of intervention. One is technology, improving the infrastructure for holding water from natural sources. And the third is actually behavioral change. And the behavioral change was remarkable of what happened with combination of tariffs and public awareness. We were able to reduce consumption from 1 billion liters to about 500, 600 million liters in the span of 6 to 7 months. I don't think it happened anywhere else. In fact, Australia tried to do that many years ago. So these are really interesting examples. There are many others, but I could go on forever. So let me give opportunity to others to speak. Thanks.
Dr. Amin, we had a few kind of smallholder and public sector examples there. I know the CDC group focuses a lot on the private sector. I wonder perhaps if you could give me an example of how this is impacting businesses, particularly in sub-Saharan Africa and Asia.
Yes, thank you. So yes, well, we only do private sector investments, and I mean, this is becoming an increasing agenda for us. So we have a new climate strategy, and one of the 3 core building blocks is around adaptation and resilience, to ensure resilience of all the investments we make, as well as to increase more in the increase our investments in the businesses that can bring the necessary solutions, technologies or services to enable sectors to adapt. Maybe I'll just briefly give you an example of each of those. So we, one of our investments in Pakistan, actually a wind farm, we engaged with the project developer, Zephyr, and the wind farm was actually on a floodplain. So through the due diligence, we assessed that, it was going to be very prone to flooding, not surprisingly. And so through that process, we engaged to look at how we could build resilience, and we focused on restoration of mangroves. So we worked to restore the mangroves, which primarily to help build resilience to the wind farm, but of course it's also brought some many other benefits actually in terms of new social benefits for local farmers, local fishermen, as well as biodiversity benefits, of course. And then also, I think, as many will be aware, mangroves are extremely powerful sequestrators of carbon as well. So, that was a really, I think, a really good example of how, we're starting to look at the role of nature-based solutions to build resilience, but also all the multiple other benefits that come along with that. Another example, more recently this year, we invested in a company, Cropin, in India, which is using very sophisticated data analysis of using artificial intelligence to actually look at, as Saliem was saying, weather-related risks for farmers. And so Cropin is providing climate adaptation services or data services to 4 million farmers in India, and also now looking to expand it into Africa and Nigeria and Kenya. So, 2 examples of what we're doing and what we know we need to do a lot more of moving forward.
So I think just with those 2 speakers, I think we can really see why how relevant to the development sector the adaptation agenda is. Really broad, really complex, lots of technical expertise needed. But something I keep hearing over the course of my reporting is that it's really difficult to actually get hold of this money, particularly in the least developed countries and other climate vulnerable states. I wonder if Claire, you could tell us a bit more about why that is.
Sure. So we've created a bit of a monster of a system. The multilateral climate funds have been set up with very high standards and expectations on those applying to them. A lot of it is highly intermediated. So a country like Nepal or Malawi is being approached by a range of different international organizations with an offer of, do you want this type of project? And then they apply on their behalf to these global funds or to the bilaterals. When the funding goes through multiple different intermediaries, a lot of it gets lost along the way for management fees, admin fees, setup costs, and so on. And what countries are finding is that it could take, it can take a very long time for the funding to arrive, but also when it has arrived, it's already a bit late, and the design is already not appropriate to the current context. When they're applying directly, they're finding that the expectations on them are very high in terms of proving their track record in doing these types of interventions, when in fact climate finance really should be there to help innovate and to help try out new approaches and then to influence other types of finance to come in behind it. But in fact they're being expected to have track record in what they're wanting to do. For some countries we've been hearing, so some of the small island developing states in the Caribbean, who really are quite sophisticated in terms of the governance and so on, they've been telling us how it can take them 3-4 years to get a project that may only be for 2 years. Africa has been telling us the same stories, and the amount of iteration means that actually they're putting in a huge amount of their own time and their own resource. With very thin governments, that's a loss. They're no longer doing something else. So this is taking up a huge amount of the capacity of the LDCs and the SIDS, which is really undermining their capability to deliver on other areas. So it's a huge issue and really needs to be resolved. One of the things that has come out from the Climate and Development Ministerial earlier this year is that there are actually a lot of very tangible things that can be done. And we really need to move from talking about the problem to really beginning to try and put some of those solutions into place. For example, could the global funds have an expectation on them that they respond within a certain number of days and that a grant is approved or rejected within a year, for example, rather than 3 or 4? Could the Green Climate Fund and the Adaptation Fund accreditation processes be combined, so you're only having to accredit with one organisation instead of with 2, because these accreditation processes are also incredibly time consuming. So there are some really practical ideas out there. What we're not really seeing is the energy to actually begin to make these changes. So the power imbalance between the poorest countries who can't access the finance and the climate finance providers themselves is really fundamental to addressing this. So this is something that we really want to see looked at the COP and progress made, commitments made.
Dr. Amin, you're an advisor to the presidency. I mean, do you think this summit is going to be sufficient to generate the political will needed to start to address some of these challenges?
Yes, absolutely. And this is a top priority for the COP president. And in particular, as Claire said, it's not just that finance exists, but rather that it's accessible and that it in particular can support adaptation. I know that, particularly, governments need a lot more support to build their capacity, to help them become able to anticipate and then put in place the necessary measures across all of their institutional frameworks and approaches. And, that really requires grant funding. It's essential. I would also say, and this is where, at CDC, we're for those of us looking at private investment, we are seeing some interesting sort of business opportunities that we would love to invest in. A lot of them are either very, very small scale or very, very early stage. And so more of a sort of venture capital type of investment. And, again, that's more equivalent to grant funding, where you don't necessarily have to require a return on investment. So I think, again, in terms of what is the nature of the finance, the quality of the finance, as well as the accessibility is key. And I think that's very much something that the COP26 is going to be looking at. And very critically, the inclusivity of climate finance.
Great. Before I move on, Saliem, did you want to come in on any of those points? How access to climate finance can start to be improved?
No, I wanted to pick up on 1 or 2 points. I think the one side is obviously the supply of the funds, and there's a whole bureaucracy around that, and Clare is so well clarified, the situation. The other is that in the context of where I work, the origination of a pipeline of projects is also one of the challenges we have, and project preparation. I see that even in my philanthropic work, that sometimes we offer money, we have grants to give, But we actually have to write the proposals on behalf of the grantee because they're either too busy or they don't actually meet our governance criteria and processes. So we have to actually work very hard at that. So there are some constraints also from the supply side. I would say that if you look at the profile of the funding, particularly in mitigation, and I think this would be true for adaptation, there's a big shift away from grants towards more concessional finance, which is soft loans with interest bearing. And I think that might also be a big challenge for poorer countries because they may not have the ability to service those even those concessional loans because it's denominated in a foreign currency. So some of these issues have to be resolved. I think in-country agency and capability is very crucial, but I would share the sentiment of Clare that we have to have a more fast-track mechanisms to be able to support. I want to iterate that in the interim, there's a need for these resources. In the long term, I think that there has to be more regional and national mobilization of resources. I don't think we can have a huge expectation that, given the current trends over the last 10 years or so, that these resources will be easily available and mobilized to the levels that and extent needed by the advanced economies, which is also a major source of distrust and concern going into the COP. So if we don't solve that, then we may have challenges going forward.
Yeah, I mean, it's been said in Parliament this week being late October, that a lack of progress on adaptation finance and access to adaptation finance does have the potential to, quote, derail the COP. I mean, is that hyperbole, or is that realistic?
I think that's absolutely right. I think the failure to deliver the 100 billion that's been promised, which is really a tiny amount, if you consider that the G20 propped up fossil fuel companies with 150 billion over the period of the pandemic. So they can find 150 billion to prop up the problem. They cannot find 100 billion to help sort out the challenges that the poorest countries and poorest communities are facing. It is absolutely central to the deal that was done at Paris. There were three legs to the Paris Agreement. The Paris Agreement fundamentally requires action on all of these three legs, and that's finance, adaptation, and mitigation. And without that, everything's going to unravel. The G20 can, the poorest, the less developed countries, emerging economies that are not considered part of the rich countries historically, are able to hold hostage the emission reductions if they're not seeing the finance flow. But I do think there is a big difference between what the emerging economies and what the larger countries can do compared to the smaller countries like the LDCs, smaller markets like the LDCs and SIDS. It's much harder for them to leverage the private sector finance. So this sort of language of, oh, well, you've got to leverage it, that applies fine to the emerging economies, to the better off and larger markets, but it's not applying to the LDCs, it's not applying to the small island developing states. And so we do have to find that public finance to support them, because they cannot get the interest, the attention of the big investors, because they're just too small a market. So we need to think about solutions, and we also need to move away from the idea that everything is going to be solved through projects being provided. So that the blame for the lack of funding flowing is quite often put on the poorest countries for not having the project pipeline. But actually, why should they have a project pipeline when really what they're trying to do is get finance down to the local level, to local governments through their decentralized bottom-up planning process, get down through their welfare system, their social protection mechanisms, or through the support, the continuous support that's provided to enterprise and business. And so we should be moving away from this idea that we always need a project pipeline. We need projects when there's a large national investment of some sort, but for these day-to-day the ways that the government continuously works with society and supports society through periods of change, that finance should be flowing more continuously. So we really need to completely reimagine the system, because it currently just is not working for for the countries that deserve that finance most.
And of course, that comes back into the point you made earlier around the capacities of governments in countries which perhaps have a less powerful bureaucracy than the higher income countries to plan for these projects. Dr. Amin, did you have anything you'd like to add to Claire's points?
Yeah, no, I agree with much of that, but I do think and governments absolutely need support, and that support needs to get down to local government level, municipals, community level. At the same time, I don't think any country, but I would say even particularly the most vulnerable, will be able to address all of these climate challenges that they're facing without the private sector. And actually, that will likely be small companies, small and medium-sized enterprises that are providing necessary services in a local context, whether that's providing services to farmers, to in a city urban context, in a whether it's enabling managing heat stress, flooding, etc. I think the private sector has to play a role. It is very challenging, though, that there are some innovative solutions coming forward, but they're often not at a stage in which they can be considered financeable, bankable, if you like, by even DFIs such as ourselves as an impact investor and responsible investor. So we do need to build out a much stronger collaboration, address all the barriers to private finance going into these types of businesses, and these businesses being able to grow in a way that they can meet the challenges over time. And we're actually leading a collaborative with DFI peers on exactly that, the Adaptation Resilience Investors Collaborative. So, and with a particular focus in the LDCs. And so, I think really important to recognize there is an essential role for the private sector as well in the LDCs in particular.
Does anyone want to come back to that? Claire.
Yes, I mean, I think just to clarify, I wasn't in any way saying that the private sector, I mean, obviously within the poorest countries, you have huge numbers of small firms. I was talking about the trillions that sit in the capital markets of London and New York and Bangkok and so on. Sorry, I think we were on a slightly different point. But the issue, I think, is to recognise that it is very hard to attract real investment in, and that small enterprise in these countries do need a lot of support. So I'm delighted with the sort of support you're developing for those businesses, but quite often to begin to make the adjustments that we really need to see. It's to grow a business, it takes a bit of grant capital very often, not just equity, not just a loan. So we just have to recognise that to get some of these businesses that are going to support and provide climate services in different ways, they actually need quite a lot of hand-holding. And what we're seeing in the renewable energy sector, for example, is that there are very few African businesses emerging from in Africa, and that is because they get much less of that handholding early on than some of the international businesses that are getting support, grant-based support from different donors. So we just have to recognise that there's a fundamental shift that we're needing to see, and it's not enough to say that we're getting businesses growing if those are all internationally owned. We need domestic businesses being grown within Africa, within the LDCs, within the SIDS.
Saliem, do you have anything you'd like to add?
Yeah, I think you need to split it up into two parts. There's a very important role for the public sector to intervene in this space. Now, least developed countries don't have the fiscal space for the public sector to play a big role. There are particularly economically sensitive and vulnerable parts of the economy which are driven by the private sector and the private markets. And there's probably a cost curve that needs to be overcome. And so some of this funding could be used to incentivize the private sector to start thinking about these adaptation issues as part of a broader economic resilience. So I just want to consistently argue that I don't think the 100 billion is going to solve our problem, but it is a mechanism to begin to seed innovation and to begin to look at this as a whole economy problem and try to solve it from that level. There needs to be national and regional approaches taken to this. And one must clearly split up between what is a public good, which the private sector is least likely to participate in, and what is actually a market-driven need where the private sector has to play a bigger role, and they have to these dots have to be joined up. So I think that the COP process, I firmly believe there needs to be a reframing of adaptation, the way the mechanisms work, and they have to be more integrated into the broader economic solutions and not seen as isolation, as little projects outside of the mainstream economic plans and recovery.
Thank you so much, Saliem. And thank you so much to all our panelists for joining us. We really appreciate your time. And I will certainly be taking your comments into the COP as we go out reporting from that. I'm sure this discussion is going to continue and continue. Just a reminder to our viewers, you can subscribe to the Devex Newswire and the Devex Invested newsletter at the links below. And once again, thank you all for joining us.